Good morning. It is October 19th, 2022. I'm Eric Sapanik. This is John Caro, and this is the Gold Spot.
Eric, we've been talking about the student loan forgiveness program, and it's a little shocking. They're talking about giving 43 million people between $10,000 and $20,000 worth of loan forgiveness. They're teaching people that if you make a promise to pay, it doesn't mean anything. The size of the numbers are starting to bother people that can't get their heads around it. We tried to look for something to compare it to, and you came up with an example.
Right, so if you look at the original TARP back in 2008, the Emergency Relief Act that we did, originally Congress at the final moment, if you guys remember this, it was literally to the very final moment, late night Congress vote to get this thing passed. And it was the original passing was $700 billion. Now, with that being said, it was reduced under the Frank-Dodds Act to $475 billion. Now, to give 43 million people money between that of $10,000 to $20,000 each in relief really comes back up to that $450 billion level. This is not a small number that we're talking about. We're talking about something that back in 2008 took us to the very final moment to say, in order to save the entire economy, should we do this? Or could this flatten the dollar? Now it's like we're asking for a glass of water, no big deal, here you go, have a nice day.
Well, they're not talking about saving the economy. They're talking about saving the administration. They're buying votes.
I would have to agree. It's a Santa Claus policy is really what it is. Yeah. We'll give you things for free, and in that case, you'll hopefully vote for us at the final moment, because obviously things are not looking good for the Democratic Party when it comes to the midterm elections, and this is really kind of a Hail Mary toss. Although they're telling you this is going to cause no inflation, think about it. Everything that they've told us up to this point in time has been wrong. That this is transitory, this isn't going to last, this isn't going to be a problem. Well, as we know, just recently with Jerome Powell, I mean, we're now going back to 1980s playbooks to try to get inflation under control, and it's just not working the way that they want it to.
Right, and the only area that we see that's got any stability is our gold and silver markets, where products are in tight supply. The result is prices are stable. You can't look at the spot price, it's not a real number, but the real retail prices are holding their own and maybe even going up, which people looking to get in may not like, but it shows us that there's one place that's still strong and reliable.
And the spot price is a real number as long as you're buying it on ETF or stock. If you're trying to buy the metals physically, especially silver, gold, platinum, palladium, all of those premiums above spot are further than we've ever seen in my career of doing this for almost 20 years. So this is the furthest disconnect from the actual how much it costs to actually buy it physically, which is far more than what you could buy it on the stock exchange, like an SLV for silver or something of that nature. So it's a much different animal, and the supply versus demand is definitely tipping over to people wanting it rather than exchanging it back for profit. So that's something that we should all keep in mind when we're buying metals right now.
The basic theory of supply and demand is the one economic theory that has been constant through all this, and I just wish the guys in Washington would learn that.
I don't think they're going to. Okay, so that's it for us today. Have yourself a fantastic weekend. Thanks for dropping by, and we'll see you next week. Thank you, John.
Thank you.